Okay, everybody, how we doing tonight? Okay, quick check. Can you hear me and see my screen? All right, very good. Okay. All right, welcome everybody. CFTC Rule 4.41. Don't lose money you can't afford to lose. How about just don't lose money? All right, it's my job to steer you guys in the right direction, keep you moving, get you earning. All right, nice to see everybody in here. Appreciate you guys. All right, I don't know if my new guys are in here. Say hi pretty quick, but welcome in. Glad to have you guys. All right, let me get right to it. Let's get into the calendar. Trying to keep about 45 minutes on the clock for you guys. See if we can respect your time, respect each other's time. All right, April, gone. May, gone. Here we are. June 1st. I don't know where the time goes, but here you are. This is 1, 2, 3, right? So your 90-day cycle, 12 weeks, you're in the last stretch of it, depending on when you started. But if you started April 1st, you're looking at 1, 2, 3, about 4 weeks heading into July 1st, which is a holiday, perfect time to end your cycle. Reset, maybe take a week off for the holiday. Right, when's the 4th going to be? Monday, I guess. Friday, Saturday, yeah, it'll be the 4th. We'll be on Monday. So you could maybe use that as a burn week and then reset from there. Spend some time with family, take a little breather. And that's going to be 6 months, man. Then we're going down the stretch. You know how summer is. Summer goes quick, and then we're looking at kids back to school August, September, and then a couple of months into November. And Thanksgiving, where I come from, is pretty much the end of the year. Can't get nothing out of nobody from November to January 5th. So if you're going to make a run, this is it, man. Now's the time. All right. All right. So we've been kicking some stuff around. I asked you guys to work on your process, developing that. I'm getting some stuff trickling in. It looks pretty good. Everything based on a 12-week year. So the idea behind a 12-week year is to be aggressive for 12 weeks. And it's hard, man. You got to stay motivated, and you can't let little setbacks or little things knock you off course, man. That's anything you do in life. Man, you're going to have disappointments, you're going to have setbacks. That's just the way it goes. You got to figure out a way to psych yourself out mentally again, pick yourself up, and push forward, man. All right, but the idea behind that is to give us some kind of structure, and you just got to figure out how to set up a framework and stick to it. I don't know any other way to say it. So I want to take a second. A guy named JR in the group, you guys know him. I don't know if he's here tonight. I haven't seen him yet. But anyway, he did a markup sheet of pullback distances. And I thought this was nice of him, and we've done stuff like this before. But here's the deal, man. He might have posted it, but I'm not going to repost it. And I'm not being a jerk. Here's why. That sheet means absolutely nothing to anybody other than him. Okay? Him doing your homework doesn't work, man. If I could do the homework for you guys, I've done enough for everybody in this group probably twice. It just doesn't work like that. The exercise that he did was for him, and he thought, oh, it'd be great to share it. You looking at a bunch of numbers on a sheet of paper on some pairs you may or may not trade is worthless to you. So the point of the exercise is that you do the exercise, right? It's like someone else can't go to the gym for you and get you shredded. If they could, man, I'd hire everybody. You understand? So although it was kind of him to do it and kind of him to share it, it's worthless to anybody else outside the group. And how do I know this? Is because we tried this, man. We did the TDI drills and the TDI test, and the 6 people that did it collectively all had success. And everybody else we passed the results on to, it meant nothing to. Right? And a girl named April Yang, very successful and moved on in her life. She's trading money and all kinds of crazy stuff. She did pullback mapping years ago, and I posted it in the group. She did the 1 minute legs and the 5 minute legs, what they look like and what kind of pullbacks they create. And it, I don't know the right word to say it. It fell on blind eyes or fell on deaf ears or whatever. The actual saying is deaf ears, but it meant nothing to anyone other than the person doing it. So you want to make your bones in this business, do the friggin' work, man. Someone else can't do it for you. You understand? So although it was, like I said, it was a nice gesture him to do it and offer it up to everybody. If you want to learn the pullback distances, you got to do the work, bottom line. So speaking of pullback distances, okay, they're very helpful, but also since we're drawing boxes on the book map, right, we're connecting press levels and holes in the book, that would give you an idea where the pullback should occur. So what's good about the pullback distances, let's say you have your apex nadir thing, right? We know it should be somewhere in here. And we know that the first cross above or break above the apex nadir thing generates, I don't know, roughly a 15 pip pullback on average in GBP. All right, so you would box in the pin and aggregate some of the body closes like I've shown you guys, and we'll do it again, and you would stretch it out. So if this is 25 pips out and the hard number is 15, it's very unlikely that this is your order. Limit orders are going to get filled here, right? They might come up short like that and turn. So you would look for some alternate way or something else to rest on, like off of the refined entry. All right, so using Bookmap, the distances is good to have a rough idea, because you could take the distance off this leg, right? You would measure the push through, right? You get the hole in the book right here, price comes back. You would look for the push through and then the pullback, and you would calculate some number. And if you calculate average of 15, and this is 25 pips off, it's very unlikely you're going to get all the way back to the apex nadir. So using the leaning post or the refined entry type of stuff where the dealer typically throws, right, which would be you would get your breakthrough and your pullback, and then you want to count this as leg one, and then you box this in on aggregate off of the bodies and wick patterns, and then you're looking for either a bleed or a straight move out of there, and this would be your leg two. So when you get the confirmation of leg one gets rejected, you use this as a confined entry, project it out forward into the box, and you're looking at, remember, I talked about it last week. If the box is less than 10 pips, you deal from the back. If the box is 15 to 20 pips, you maybe want to aggregate in, and I'm going to talk about that a little bit tonight, how to aggregate on the box and how to front run these guys and get an average entry of a pretty heavy or decent position. All right, so it's no disrespect to JR or anyone else that shared this or done the work. The idea is that if it means something to you, you'll do the work and it will mean more to you. So anyway, that's my parable or my advice for the day. All right, so we were talking about processes last week. A lot of people are sending some stuff in. It's pretty good. I want you to kill your weakness, right? My whole life, people made fun of my calves. Guess what? I went to the gym and started doing calves. So kill my weakness. If you're strong at something, if you're great at analysis, you're great at money management, but you're not so great at executing, then you need to friggin' execute as much as you can. Start off in demo and then switch to small money size and just 100 executions, 1,000 executions. All right, I gave you this whole spiel last week about, I was on the fire department, my very first call, I was like, hey, they're ready to get some people over here, man. We need the fire department or something. And it was on me. And over the years in my career, 500 calls, 1,000 calls, you hit these benchmarks, and all of a sudden you're the guy that they want you in backup. The ambulance is hoping that Steve Morrow's on the scene getting somebody out of a car. You know what I mean? That's the difference between an amateur and a professional. Well, how did I do that? Okay, 20 years on the fire department. That's how I did it. And now 20 plus years in the trading business. That's how you do it. Okay, it's not going to happen overnight, and a lot of you guys can't get your head around that. It's like you sign up, you throw some money at me, and you're like, okay, I'm a pro. Let me burn 20 accounts. and then you go, I hate this guy, he sucks, curse me under your breath in 5 different languages, 4 of which you don't even speak, right? It doesn't work like that. You got to do the drills. You got to do the charts JR did. You got to mark stuff in and send it to me. It's basically, right? It's like Sun Tzu, Art of War. The battle is won before it's even fought. Okay. You want to say you're battling against these guys? You're battling against the market? Okay. So how do you do that? Planning, homework, planning, demo, more planning, adhering to some rules, all the crap that I ask you to do that you probably go, I don't know why I come to this guy's DMR. He asks me the same shit every week and I don't need this, right? Okay, well, the truth is you do need it. I've taught, it's a lot of people, thousands of people. I don't even have a hard number, all over the world, man. Some of you know my story. I started OTA, and I thought they were teaching a bunch of bullshit, and I wasn't happy. So I started teaching my own material at OTA, and I got fired pretty quick. The truth be told, this is how I met Carr, is I took their textbook on the first day of class and threw it in the garbage. And I got some attention from some guys, and next thing I know, they didn't want me there. They had no interest in me. So long story short is that how are you going to become the confident trader you need to be? It's doing the work and kill the weakest part of yourself. It's something that you got to make a conscious effort and decision to do, and I can't help you. You don't like your biceps? Go to the gym and do 1,000 curls. Okay, you don't like the way you're trading? Send me 1,000 markups. You can't see it on the chart? Send me 1,000 box draws and double tops and retests. That's how you're going to do it, man. That's the only way. All right? Kill the weak guy. You can't cry, you can't whine, nobody gives a shit. At the end of the day, this is a on you business, by yourself, for yourself. You either wallow in pain or you find victory. It's up to you, man. All right, so I gave a pop quiz about this stuff. We're talking about flow charts. This is a big deal, man. I know a lot of you don't want to do it. I got some coming in. They're really nice, and I want to share them, but I was giving everybody a chance, so I thought I'd mention it again. I haven't gotten through them all. Some of them are really detailed and good. I'm looking for just the categories of stuff you're supposed to do. So I'm going to give you another week to submit them and see if you can't do it, right? Remember, you got the categories like, what do you do before a pre-market? What do you do when you execute the trade? Where does your stop loss go? It needs to look like almost like maybe a timeline or something, like your zero entry, your take profit, your stop loss. What do you do? Your analysis. What's your analysis? What's your entry? Right? What entry are you using as your entry technique? What do you do if the trade goes against you? What if you do if the trade moves in your favor? It's kind of like a trading plan, but a little more of when you work in the office, man. When you show up at your time, 1 a.m. New York time, wherever you're from, what do? You put on the TV or put on Amazon Music or something? What do you do? What are you doing when you walk in the office or work in the office? If you got 5 hours a day in the office, how are you spending that time? Show up at 1 o'clock, check down some pairs, draw some levels, put some alerts, right? We have those chin alert lines, or it's easy to find alerts now. Don't deal just to deal. Deal in the areas of the chart that make the most sense. Apex nadir, push through the hole, tap back in, double top, M shift through. W formation, hole in the book, order flow comes in. You see the big Pac-Man in your mind when you get that big green bar, right? No new money coming in or no new money coming in. No new money is when the trade stops. New money is when the dealer floods the book and pushes through an area. This is the stuff we've been talking about this term, and we're halfway home, man. So 6 more weeks, and then I'll give you a test. You didn't know you were going to get a test at halfway through. I'm going to test all the shit from January to now. All right, just try to figure it out. But listen, you're here for a reason. You chose this path. You ended up here. Don't wash out when you're right there. You just got to do the work, man. Sitting in front of a chart, executing trades is not doing the work. Doing the work is the pre-market, your process, developing a plan, sticking to rules, right? I can't remember where I read it. I don't even know if my wife sent it to me. it said something, the difference between an amateur and a professional is discipline, basically. It was like more long-winded than that. But really, that's it. The discipline, doing the stuff, having a set of rules that you can follow. If you don't even have a set of rules or wrote down a process, then how the hell you know what you're supposed to be doing when you show up? All right, that's my sermon, I guess, this week, man. Let's look at some charts. Yeah, I feel like a minister every week when I come in here. All right, man. Looking at some charting stuff. I just wanted to give you a quick reminder. I haven't mentioned this in a long time. It's in my original class and maybe a couple times after. But don't forget to keep track of your session counts, right? Your directional move, right? Remember, the dealer's never going to move the same direction 3 sessions in a row unless there's a big shift in process, and that happens about 4 times a year, 5 times a year, right? You quarterly, you see a big shift where all 3 sessions drop. You get those massive moves in GBP, and sometimes you get quiet from 4 o'clock to about 7 o'clock. That will be the sideways consolidation. Then they hit the stops high, and then they drop for 3 sessions. The rest of Asia, London, and they end flat. We've seen a couple of those moves, last few months, month ago. Big, massive moves, ADR plus 2 or 3 times in a row, shift the zone. They traded another number, right? You get the flat print on the daily. We looked at those charts together, and the price the bottom just keeps falling out. All right, those are huge. Those are stuff that's beyond our control. That's like the price of oil, or they got to shift it, right? Price of oil's going up. It's $100 a barrel. Right, it was like 60, 70 bucks a few months ago. Blame it on war, blame it on what you want, but money involved. That's the excuse, the trigger, right? We know GBP sold off last few months, huge, massive down move. Happens all the time. Gets closer to dollar in value, then they drift apart, converge and diverge. Keep those in mind. But session counts, right? Asian sideways, drop, drop. Asian move, London move, US reverse, right? Always. Okay, you could get Asia high, sideways in London, they'll work the crosses, and then they'll drop again. Just keep in mind that if you're getting a huge move, if you got that move yesterday, Tuesday night, Monday night, going into Tuesday, you got a drop in Asia, drop in London, flat print, reversal. Okay, if you didn't get your money out of Asia and London, you're done, man. Get out of there, go to bed. You know what I mean? That's your 2 drops, unless you took the reversal back into the range, you greedy bastard. All right, good stuff, man. Just keep in mind, just to be like, oh man, look at that. He dropped Asia, he dropped London. He's probably not going to drop again. He's going to snap back into the mid-range. Just keep that in mind. All right. Remember, I just said it, this is bigger picture stuff. Shift the zones. It's I don't know, what is the word? Geopolitical stuff. Stuff that has nothing to do with trading. It's just part of the game, man. Right? And then this is going to give you a clue what's going on instead of following the crowd. Like, oh man, short everything. People should walk up to their screen and see Asia down, London down, and they get in there and start selling. Sure enough, the dealer flat prints it and snatches it away from them. Back into the range. Just keep in mind. All right. So I wanted to talk about this. Some people are doing this and they're not doing it right. And it freaks me out when they send me their charts in, because I know they're going to be bankrupt in about a minute. So I want to talk about this. By the way, I'm not a huge fan of this. I'm a fan of multiple orders, but there's rules to it. I wrote an EA for this, but I called somebody on and they told me, this is what you do. I'm like, no, this is not what I do. So somebody was like massively over leveraged, and I didn't see a stop in there anywhere. So I want to spend some time talking about aggregate entry. There's absolutely nothing wrong with it. It's perfect. It helps you get a really good weighted entry. All right, so the question is this: how many times you pull the trigger on a trade, you're in it, and like in 5 minutes later, it's like, damn it, I wish I could get in right there. That's even better. Right? So I built the concept over 15 years ago. I don't even remember when, man, but don't make fun of me. It's handwritten on a piece of like plain white paper. I'm almost positive the paper had tractor feed on it and I had to tear it off. That's how long ago it was. All right, but the idea is that it's really good for beginning traders that can't go all in, or maybe can't see the levels exactly clear yet. Of course, you got to use a stop, and you got to limit the number of entries based on your risk, man. You treat it as one whole trade, but it's aggregate. So this is the thing I wrote. We used to use a lot bigger stop before we had access to Bookmap and order flow and other things. So the idea is to take an entry, right? Let's say up here you went market, you went hot, then you put a pending order 20 pips below that, right? And then you would put your stop loss 23 pips below that. Always use an odd number on your stops if you can help it, 10, 11, or 9. Okay, so what happens is if the second order gets triggered, right, this is the stop holes for both orders, and your market entry, your take profit adjusts down, and you're in on aggregate. So if you're trading 10 lots, maybe you trade 3 and 7 or some weird number, 6 and 4, and I'll talk about that. But the idea was to give you a weighted entry on the backup side. If you're trading just 2 orders and you're trading 10, you would probably go 5 and 5 to get your order in. The mathematics on this works out, and it gives you like a range. So the idea is if you're trading like this and you're looking to get long here, and you get that long, and then the dealer comes back and sweeps it one more time, then you would pick up this other order, and on aggregate, if you were weighted, you would be in about 1/3 the distance, right? So that you're heavy and you're not half, you're 1/3 lower, right? 2/3 is above you, 1/3. So you moved your entry order from here down to right about there on aggregate. Your backup order would trigger, and it would adjust, take the 2 orders, average it, and it would give you an average order entry of maybe 3 to 5 pips off of that low swing, and it would pull this order down in your favor. So every tick, 5 lots would be erasing, let's say 7 lots would be erasing 3.5 ticks on this side and adding ticks on this side. Does that make sense? Right? So you're canceling out this order quicker as this order gains. So you're getting a break even at a much better price. And when you play with it, you'll see what I'm talking about. But what happened is this evolved over time into something better. And it became, I don't know what the right word is, I guess adjusted for modern times. Okay, so just suppose you use 10 lots, mini or standard, right? Just for the example, you can do the math on your own stuff. You calculate the max stop loss size. For argument, I'm just going to use 30 pips. Okay, so how can you spend this money? You can take 10 individual pulls, which is hard to do, or you could take groupings. You could take 2 at 5 pulls, right? You can go 2, 2, 2, 5 times, or you could do 2, 2, and then 3 2s at the bottom, right? 1, 1, 2, 6, or 2, 2, 6. The idea is to get the last order, the last weighted order, as close to 0 entry as you can, right? If you get a 0 pull, right, we know like we're doing this. Let's say you start feeding in here, right? You get an order there, goes against, you get an order here, then you get that stop hunt pullback and you get your 0 pull off of that. And then you get the shift in your favor, right? Tap back. That's the idea. So what happens is, again, you're weighted to the downside. This order is twice the size, or it's greater than these two combined. So your average entry is going to come down about 1/3 of the way up. All right, but the key is that the stop loss still goes where it goes, and it counts for all these orders. But if you do the math on this, like if this is 1 lot, this is 3 lots, and this is 6 lots, right? 1 at 10 pips, or what did I say, 30 pips? 1 at 30 pips is going to be 30, right? 2 at maybe 20 pips is going to be 40. You add up all the numbers, right? And then 6 at 5 pips, right, it's going to be 30. You add up all the numbers and you make sure the percentages work out. You add up all the pips lost, cost per pip, and you get your percent risk. Does that make sense? Okay, so what this does is how many times, like I said, you got it. It's like we used to call it a foot soldier, where you put a maybe one little mini lot on or one standard lot on, and then you see how it develops. And if you get that pullback, you come in weighted when you feel like, oh man, they rejected the lows. Okay, I've seen a lot of people doing this, like you get the W, and I see they send me these pictures with like 5,627,000 lots on spread out over here, working the W because they're selling into this or buying into this, buying on the way up, buying on the way back down, and they end up with this big mess. And then they show me, oh, look at this, look at this. I caught all these orders and doubled my count in 20 seconds. Oh, man, that's fantastic. Where's your stop? Oh, you mean I need one of those? Hell yeah, you need one of those. Because all it takes is some kind of variance or change in the book that they decide to go this way. And all of a sudden you went from doubling your account in 1 minute to losing everything you had on leverage and margin, and them giving you back $10 and say, thanks for your time. All right. So understanding, like, I don't know, the go, no go zone. I don't know what else to call it that, but let's talk about what that's supposed to look like. Excuse me. Okay. So there's a dividing line between when you're supposed to be pulling the trigger on trades, and you need to know where that is, right? You need spacing of both time and price. The dealers vary the level through time and through price, right? They punish you. How many times they hit the low and they hold it 30, 60, 90 minutes, an hour and a half, 2 hours, 3 hours, I don't know, 90 minutes is the same, right? You know what I mean? They hold the level, they consolidate flat print, and they're consolidating, accumulating, and you're sitting there going, man, my trade ain't going. You're adding orders on top of orders. So you need to allow a timeline and a price line of where you would add these orders in. And you need to have a go, no go area, right? Never execute 2 times on the same bar unless it's over 15 pips, right? So if you got a bar coming down this way, right, you can't violate the time rule. You get in here, and that's a shitty pull. Okay, too bad. Then you wait. You wait for this bar to close, and then you're looking to see what happens. If it cuts the low lower and ends on a hammer, then you go 1 bar over and you execute here. Although you could have executed here, but now you know they triggered the stops and came back above, right? They came back above the body close. That's different. So now you can comfortably use, right, 15-minute bars. This is 30 minutes elapsed time. That cuts into time and price. It's very close to the price you would have got filled here, but you didn't have 2 orders drag negative and pull back. You had the pullback on a pin, come back as a hammer, then you executed here. This order doesn't go into the negative. This one does. But if this is 1 lot and this is 2 lots, you're weighted. So you're going to pull it down to about a third. That's your actual entry. Okay, I hope this is making sense. Okay, always have a fixed order amount, and you have to spend it all. The deal is, and this happens to a lot of people that try to do this, they might say, okay, I'm going to trade 30 minis, which is 3 standards. Okay, they do 30 minis, and they get their position, and they get 20 on. Okay, well, there's nothing wrong with getting 2 standard lots on, but here's the problem. If you get 2 standard lots on and win, and you get 3 standard lots on and lose, you're still down, depending on how much you get, of course. But the idea is that to aggregate in gives you a better average pull, but you also have to use risk to reward ratios in order to make it work. So the lot sizes have to be executed consistently, even though they're spread out over a range. Right? And the lot size can't be more because you're taking multiple trades. The lot size has to be the same as if you were going all in. So if you're trading 2 standards, then 2 standards is the size, and you got to get it over. Maybe you could do 4 entries, 5 minis spread out, but you got to get the 2 standards all in. And now on the next trade and the next trade, you can't only get 1 standard on by getting 2 entries. You have to figure out by doing it where to make those entries, and that just takes time. So go, no go, right? And you calculate and manage the orders and risk all as one. So this is the dividing line, right? We'll call it the Mendoza line or the Mason-Dixon line, whatever you want to call it. But here's the deal. Okay, we know all this stuff. We know Asian range, price comes down in 3 pushes, and there's your leg, right? Okay, the dividing line is, if you will, cut the W in half. Cut the M in half. You know my favorite is to do M's, but cut the M in half. Okay, you do not execute on this side of the Mendoza line. You just don't do it. You execute on this side of the line, and then you're at, right, push 3, 1, 2, 3, push 3, and then the second half of the W. You're going to miss some A frames and some V frames. That's life. But the better trade is the failed auction, right, to the downside and the reversal, and then start getting your orders in. That's the better trade, right? If you get a failed swing, failed sell side auction, buyers have the book, right? Sellers have the book. What happened? Failed buyer's auction, sellers took the level. Failed buyer's auction, sellers took the level. Now you're here. They close back above. Buyers win the auction. They come back. They try to hit the low. The low gets rejected. And they come back, break above, and tap, right? So what happens is sell side, buyers take the book. Buyers close above, pull back, failed seller's auction, higher price. Your job is to zone this just like this. Okay, that's your zone. Now, you're going to execute 5 orders. Maybe your first one, as this is coming down, first one goes in here, second one here, third one at the turn, and fourth one. Or you go all in, if you're doing 3 orders, you go all in at the rejection low and the hammer closes and you're aggregated in. If this looks good to you here, then you pull. If this looks better to you here, then you go in, you start going in here. And if you get sideways print, you let time and price work itself out, and you get here. Don't just start pulling random orders and then make a big stripes everywhere. You're too smart for that, man. That's some amateur shit. The idea is to get a good weighted entry as close to 0 as possible. And this is what happened, man, is I used to do a high-low drill, and I taught you guys to do that, and maybe I haven't talked about it enough, but that's the most enlightening drill for price action on the planet. If you could do the high-low drill, you do it with some success, you'll be on point. Everyone that's ever done the high-low drill and was accountable to me and sent it to me went on to be successful. Facts. Hasn't been a lot of people, but the ones that have done it are successful. Because you pick the pair you like or 1 or 2 pairs you like, and you drill the crap out of that, man. And that is going to give you insights to the way the dealer moves price, the way he cuts the levels. That's going to be the most important drill you probably could ever do in this entire business, is the high-low drill. And do it with some love, man. Like, get into it, mean it. It's time consuming. You got to be in front of the screen and you got to try to catch it. And what happens is, let's say you're going to use 5 orders. 5 orders is your number, okay? So what this does, it's like that's your budget. 5 orders is your budget. All the same size is fine. How are you going to spend those 5? And if the high is getting away from you and you're trying to short it and you spend your 5, you're out of business. That's a loss for the day. If your orders are 10 or 7, you set the number. But the idea is to get down to catching the high and getting a 0 entry within those 5 orders. So if you're starting to execute, and I've seen a lot of guys that execute the first leg and then it becomes a pullback and goes higher and they spent their 5 orders right here and they're out of business. It's a loss. That's why you have your go, no go zone. You draw a line. The idea is to cut the M in half. Okay? You don't execute from anything on. That's the dealer side. This is your side, right? The dealer's doing his business, making money, trapping higher level longs into the lows, trapping lower level shorts at the end. And then he apex naders, comes back, right? He gets all the stops of these people in here. And then you start dealing. Okay? If you're really good at getting here, then you can aggregate the opposite way. Right? You can get the second leg coming in and you can go heavy here and then maybe add in, right? You would do like a 6-3-1. And what would happen is you turn a really good entry into an aggregate, and then it's like you got 2 trades on. Once you get this 6 and you get separation, you can go stops to break even and come in again, right? We know that the dealers vary the levels, and we know that. Okay, it was awful, by the way. There's the go, no go, no go, go. All right, so look, if you get a hammer here and you get 6 lots on here, and you're like, man, this is a really good trade, and starts developing, and then it comes above here and taps and goes like that, and you want to get another order on, that's okay too. As long as you got the first order blocked, right? You block the margin and it's a positive gain, you get maybe 10 pips out in front of it. Never put another equal order on and not have a stop out in front of the first, because now you doubled the risk, right? If you're 2%, you just went to 4% risk, providing that your stop's not all the way down here for the second batch. Okay, protect the first order, and then if you like, you get a flip and you get the second leg and you want to come in again, you just made 2 trades blocking the first, and then this becomes the managed order. But if you can use 6 and 6, or you can use 10 and 10, or you can use 6 and 3, and I'm just using numbers, man. You can use 6 and 3, so this, your average entry stays lower and your stop could be lower and give you a little breathing room on the second one. All right, there's a lot of little money management nuances and tricks that people don't really know, and I've talked about them on and off for years, and if you're relatively new, you probably ain't going to find it. So I thought it was time to mention this stuff again, if that makes any sense to you guys. All right, so the idea, sum it up real quick. Okay, the entry comes like level 3, push 3. So if you know, like the intraday reversal, right? We know 3 counts into the low, right? This would be our pushes, and depending on where we are for the day, right? And if you get a full move, you're in level 3, and then you're looking for a 333 type trade, and you want to start working after the pullback here. That's where you're supposed to be working anyway. Anywhere else is wasting your time. It's no go, go. Right? If you're trading sell side out of the Asian box, you're looking for the breakout M, cut that in half, and you're looking for a pushback here, you're dealing in here. But if that moves against you, you can maybe scatter a couple orders like that. But as long as these orders are weighted at 2% risk or 3% risk, whatever your number is, if these orders are spaced out 20 pips, okay, then 20 pips has to be your number with a 10 pip stop. That's 30 pip move. Yeah, Joe, absolutely. Go, no go is like a red light, green light, right? This side, no go, red. This side's green, go. You're just looking for an area on the chart, right? And I mean, it'd be kind of cool if you color this side of the chart red. I'm sure we can get an algo to do that somehow. This side of the chart's green. This is the dealing side. It's like I talked about the platform when the highs formed and they get the first solid pullback that takes out the swing. Then you're on the green side of the chart, and then you could execute in there freely. And that would be in a box drawn range, right? So if you got here, right, you just have to think. You have to use your head, man. You got your Asian range, right? Price goes up clean, pulls back, right? This side shaded red, and then you would take this swing and you'd box it in, right? It's a high side Asian range, right? This would be AR0 at the top, your mid, and then you cut the box in half, right? It's like you don't deal until the gray box stops painting, right? You don't deal until this time 1. You can deal from 1 o'clock on, right? So the same thing, you don't deal until this box is in place and you get the flip. Now you start dealing in here, however you want to do it. You want to go all in, but if you've ever kicked yourself for going all in and then you're stuck and then you move your stop and do all that crap, this is for you. You haven't got to the point where you refined your entry at the level it needs to be refined. That's okay, man. It's not, you need 1,000 iterations. You need to get a lot of reps, and it only comes from doing reps. You can't compare yourself to somebody that's been in the business 23 years if you've been in 23 minutes. It doesn't work like that, or 2 years. Especially if you've been in for 2 years kicking tires and thinking, oh, one of these days I'm gonna send Steve some homework. But I don't want him shredding me in front of everybody. Listen, again, never gonna shred you publicly in front of everyone. Never mention your name. I might shred your work, but I ain't gonna shred you, like I ain't gonna do you like that. I'm not gonna say, oh, Joe sent this shit in. Never. We'll talk about it, and a lot of times when I say stuff, I talk about stuff, it hits a lot of like, it resonates with a lot of people, and then they get mad at me and don't come back for a while. They go to car session. You know what I mean? And I'm not trying to be a jerk, man. The only way you're gonna get through this business is work ethic. There's no other way. It's just get in there and do it. I kill the weak guy. You don't like the way your triceps look? Do 5,000 push downs and call me next week. So you need to do 5,000 push downs in the trading business, or you need to do 6,000 deadlifts, whatever the number is. You don't like the way your back looks? Do some rows. Okay, you don't like the way your trading looks? Do some executions. Try to aggregate, try to catch the high of the day. Have your go, no go area. Know where you're supposed to deal. It's all part of the process, right? The thing is I've been at this a while, and I had all my rules written down years ago, and I used to get yelled at, just same stuff, man. The dude was relentless. I mean, he was like, I don't know, one of the top guys in the world. He was a badass. So if he talked to me like that, what was I going to say? Just take it and do what he told me to do. The difference was that I had to answer directly to him. You guys, there's too many of you. I can't hold your feet to the fire. I just, every once in a while, I'll prod you an email, say, hey, how's it going? What's going on? Where's your stuff? Right? Some people drop out, they vanish for a while, and then they come back around in a few months. They go, can't believe all the time I wasted. I should just listen to you. But I can tell you this, and Carl will tell you the same thing. Every single person that didn't do the homework and then did the homework writes me and says, I don't know why I didn't do the homework, man. It's the key to turning the corner in the entire group, business, everything. And you could test stuff, you could do stuff, but until you can see it statically, and the thing too, bar by bar, click at a time, or WSM viewer, there's ways to do that to speed up your learning curve. We didn't have that shit when I was coming up, man. I used to literally have to press the right arrow key and let it go one bar at a time. We didn't have no WSM viewer, and the thing is, and like, I don't 100% agree with Jim handing you the setups every week to look at. That's the same thing as JR doing your homework. But you know what that did for Jim? It made him a fantastic trader, because he does it every friggin' week on 50 million pairs. He's been doing that for the last 10 or 15 years now. So think about that. Jim knows where that shit's at. He knows where the setups are. But how am I going to convey that information to you? Him handing you that information means nothing. You got to at least plug it in and look at them. You know what I mean? Anyway, all right, man. So aggregate entry, this is the thing too. Is I used to have an EA for this. Where's this thing at? We used to have an EA for this, and we got tired of reprogramming it, man. I have some great guys that are willing to do it, and they do it, and then they just change the code, or they change the version of MT4. The code's got to be adjusted. You could just do this with pending orders and manage it yourself. I mean, that's the bottom line. You figure out a distance that works for you. This might be too big for you guys. Maybe you want to do a 20 pip, right? And you do it at 10 and 10. You know what I mean? So the idea is for you to manage this yourself, get in there, set up, this would be 0, this would be 15 pips out, maybe this would be 30 pips out, and then a stop 10 pips below the whole thing. And then you manage this thing. And if you catch a really good entry and you want to go break even and add to the trade, that's okay too. All right, let's see. Position sizing we talked about. You can use the spreadsheet for that. A lot of you know where that's at. It should be in the group. But you would take spreadsheet, spread out the 30 pips, 40 pips stop loss, then see what kind of risk you're looking at, and then cut that order into 3 pieces, 5 pieces, whatever you do. And the idea is you want to practice this on the high-low drill, do the high-low drill and start with 5 orders, or if you're going to do 10 minis or 10 standards, then do 1 order at a time and see what that comes out like. And if you're going to take 10 shots at catching the high to 0 entry, try that. And then if you could do it in 10 or do it in 7, then you hold yourself to 5. The idea is to hone the skill of catching a 0 entry, this point on the chart where it's the highest high of the day. Okay, when I did the drill, I had to use a 5 pip stop. If I got stopped out, I kept going, and whatever my spend was for the day. If I had 10 lots or 10 entries, 10 minis, whatever it was. The idea is use a 5 pip stop, and you'll see crazy money management is you might have, it would be if you hit 1 out of 5, that'd be a 20% hit rate, right? But if you use a 5 pip stop, think about that for a minute. If you catch high of the day and you get 50 pips and you took 4 losses for 5, that's 20. You're net 30 for the day. You still made money. I know a couple guys, I'm pretty sure Florian uses, turn this into, it's an aggregate entry system. It's a way to come out like with very little to no loss if you spread it properly and use time and price. Don't enter another order at the same price point, and don't enter another order at the same time within a few minutes of each other. And the only way to gauge that is candle, right? Because the dealers use time and price. They vary the price and they vary the timeline, right? So if this is your first entry at 0, this could be 15 minutes out, 30 minutes out, 45 minutes out. We know this. We know that they set the highs and lows in 30 to 90 minutes, right? So if you get in all in here, you're sitting here for 60 more minutes with this, man, it's frustrating. Then if they trigger the stops, you had an entry there, and now you're out because you spent all your money in the early hours of the session or the early timeline of this developing. What's your enemy as a human being, as a man, as a family, as a person up in the middle of the night? Time is your enemy. That's the biggest thing about the business. Time is your enemy, because most people trying to make the transition, they get up at 1 o'clock, they sit up for a few hours. I know Vinesh kills himself on that schedule. I bring him up all the time because I admire him. He's a fantastic guy, and I can't believe he could do that. So it's hard. It's the time is your biggest enemy. You wake up, you're exhausted, you want to get something on the books and get back to bed so you can go to your regular job. That's tough, man. So this is a way to spread it out because the dealer's using time against you, right? And then you're in something, you start seeing things, you go, oh, it's going my way, and you don't want to cut the trade when it's going the wrong way. So if you're all in on something, this gives you an opportunity to take another stab at it. And if you get the turn, you can add the rest in once you know you got it. And maybe even wait till it breaks above the first entry and then get the rest on. This doesn't aggregate out properly. It's not weighted correctly, but it's not a bad way to go. All right, out of time tonight, man. I'm going to leave it there. 47, I went over. I can't even keep timeline going with you guys. Okay, we'll talk about some bookmap stuff next week, and send me some examples. Maybe if I get enough in and I feel like everyone, I don't want to give the solution to the process stuff if people haven't done it yet. So another week or so, see how it goes. All right, guys. Good night. Thanks.